Now, here are Morgan Streetman and Roxanne Wilder.
Welcome to the Morgan Streetman Show. We got a very special show for you here today, folks, and we thank you so much for joining us. We're going to be having a couple of my old friends on today, longtime friends of mine, and these gentlemen are involved in a gold mining company. It's based out of Canada, and these are some of the most interesting guys that I know, actually. And I really love it whenever they'll give me a little bit of their time to evaluate some of the stuff that I like to look into, because we're all interested in the same kind of things. And so it's really great for me to have the opportunity to bounce some ideas off of them and bounce some thoughts off of them. And that's some of what we want to do today. But before we jump into that, I want to introduce our guests. And we've got here with us the president and CEO of Metalla, Brett Heath, as well as a board member at large for Metalla, and all-around amazing guy, E.B. Tucker, who's one of my best friends and just really have enjoyed our relationship over the years. Welcome to the show.
Thanks for having us.
And I was wondering I was wondering if we could start off, if you guys could just give us all a brief introduction to Metalla.
Well, first, Morgan, let me say that I just recently checked, and it's 10 years ago this month is when we first worked together, which is really kind of amazing. So, and you have helped us tremendously over the years. So, as you know, we've been interested in gold for years, and Metalla is a royalty company. So Metalla goes out and buys 1% or 2% of the production of a gold mine, and when you buy a royalty, you don't care what happens to the gold mine, the cost of production, or oil prices, or labor strikes, or crazy dictators that do something in the country that's problematical. Well, all you care about is 1%, 2%. It's the closest thing to having taxing authority that I've ever come across. And so it just so happens that we're focused on the gold business, and we've cobbled together 43 of these so far, and we aim to keep buying them. And what happens is when you accumulate these things, you've got 10, 20, 30 years of 1%, 2%, whatever you buy. And if the gold price rises, that becomes incredibly valuable over time.
And this is a finance part of the industry that's important for the actual gold miners. So when I say you're a gold miner, you guys don't actually have teams out there digging.
We have perfectly manicured nails. We don't do any shovel work or tractor driving or any of that stuff. And in fact, what's fascinating is the royalty industry has revenue per employee numbers that Google envies.
Yes,
you can do $2, $3, $4 million in revenue per employee because you've got some legal expenses and accounting, and you have to have a secretary and these things, but you don't have guys flying around the world doing backbreaking work and setting off dynamite down in the mine. You don't have any of that stuff.
Well, so. I mean, true mining, when you're actually going out and doing the digging, and a lot of that's not done by hand, it's done by big machines. I believe that is the largest CapEx industry in the entire world.
It is without a doubt the world's worst business.
Yeah.
I've analyzed every business you can imagine, and mining is the worst by a mile. It takes incredible amounts of money to get the gold out of the ground. A great movie to watch is Gold with Matthew McConaughey. It's based on a true story of a mining fraud where they said they had all this gold and they didn't have it. It was a legendary fraud in the industry. A company called Bre-X was the genesis of that story. But if people watch that, McConaughey's great in the movie. The storyline's great. It's really entertaining, but it kind of explains in a nutshell how the business works. When the world came to be, whoever put this place together, we're spinning around in the universe, they didn't put any of the gold near freeways or infrastructure of any kind. I mean, they put it in the middle of nowhere, and usually it's in troubling places. Places where you've got to go cut a deal with some guy that's got 10 guys with AK-47s around him, and he wants a payoff or something. It's just awful. Then, as you mentioned, you've got to get $100 million worth of equipment into that backwards place, and all the fuel and water and all this stuff. Well, we just look at that business. That's a lot of work. Who wants to do all that? So for us, we can come in and say we'll buy 1% of that, and we can put a price tag on that. And you're right, it's a finance business.
But by performing that streaming function, you're kind of capturing the best opportunity with the least risk.
You get to choose.
Yeah.
So we look at hundreds of things. I mean, Brett does the hard work in this business. I do some of the other stuff, but he looks at hundreds and hundreds of these things, and there's there's thousands in the world, and you've got to weed them out and pick what you want. And so you don't want to. They're not all the same. I mean, if something is in Nevada compared to Congo, I mean that requires kind of a different set of eyes, and so you've got different kind of return metrics. But yeah, you get to choose. So you choose what's best. We have an opinion of what's best. I mean, there's certain places we think it's easier for people to operate.
Now, Brett, tell us a little bit about your background, because you've got a long background also in the streaming industry.
Yeah, Morgan. So I've been doing streaming for the better part of a decade now. Metalla was started in 2016, so about September 2016. So we're about 2.5 years into it so far, and it's really just a fascinating business. Royalties are some of the most incredible financial products that have ever been designed for the resource business. I mean, they truly give you non-dilutive top-line cash flow. I mean, think about if you could have gotten a royalty on Amazon or Facebook, right?
Yeah.
And top-line revenue. We can do that in the mining business. We can do that in the resource business because we register these royalties on title. And it's important for the listeners to understand, it's not easy. It's not really that easy to get exposure to gold. You've got a few different options out there that people normally end up in, right? You've got physical, which is obviously by far the safest and secure form, but it often comes with very high transaction fees. And investors sometimes get stuck in these transaction fees kind of eat up a lot of their potential gains if they get some. Now, the other part that investors normally go to are the kind of exchange traded products, right? So you've got these big exchange traded products, whether they're GLD or, other variations of that follow the price of the metal. But the problem with that is that, it is really a proxy of the metal. I mean, it kind of doesn't really make sense for owning it in the first place, right? You're owning gold for safety. You're owning gold for all the various reasons that you kind of want to hedge against the rest of your life and what potentially could happen. And there's just not a lot of options out there. And a lot of investors will end up in the mining sector or the mining companies and normally never come back because that's a very, very tough business, as EB mentioned. But what we're doing on Metalla and really what we're giving investors is we're giving investors a way to own the gold in the ground by some of the biggest operators that are going to be pulling this gold out of the ground for the next 10, 15, 20 years, and they get paid to wait. So they get all the leverage and more in the event a price goes up, yet they get paid to wait. The ETFs, these other products, physical, they all charge you fees to hold this stuff. So you get the benefits of a growth company. You get the benefits of having that real exposure diversified across the world. And, when gold's in the ground, governments can't take it. That's important, right? And, governments often don't have the ability to and expertise to pull it out of the ground. Some governments have tried, and, we're pretty clear about not going into those jurisdictions, but it's really the safest and most levered way to get exposure to gold and get paid. It's a phenomenal business, so we're really excited about it.
Well, one of the things we do want to talk about, and you've brought up some of it, is some of the difficulties with owning and holding physical precious metals. Because like you said, I mean, not only have you got the transaction costs, like 10% each way, 10% when you buy, 10% when you sell, guaranteed, which, by the way, might eat up your entire 20% gain. But then you've got to store it somewhere. You've got to think about thieves. People will come and steal, particularly if anybody knows you've got a lot of physical gold in a certain location. They might come and try to take it from you. So, I mean, there's a lot of risk in trying to hold precious metals in different ways. If you hold the paper, that kind of defeats the whole purpose, like you're saying, because then you've just got a piece of paper that says you own gold, but you don't have the gold, so that's not very secure. But if you hold the physical, you've got all these additional costs, and you've got to find a place to store it and keep it safe and stuff, which, for a lot of people is going to be a big issue. A lot of people are going to buy some cheap movable safe as opposed to a big, bolted down safe. But heck, folks, how good is a safe if the people come and put a gun to your head and say, give me the combination, right? So, when you've got all of these issues with holding physical, it's important to look for another way to leverage yourself and hedge your other investments against the potential for economic collapse and to catch hold of some of this, what we're expecting to be a rising gold price. And that's one of the things we want to get into and talk about in this show is some of what's been going on with gold over the past decade or so. So we're going to do that when we come back on the Morgan Streetman Show on Money Talk 1010. And welcome back to the Morgan Streetman Show. Joining us today, we've got a couple of very special guests with us, E.B. Tucker and Brett Heath of Metalla Royalty and Streaming Company, which is based out of Canada, which is involved in precious metals, I believe primarily in gold mining, royalty streaming, which involves financing of these very expensive gold mines. It's cost, just hundreds of millions of dollars to have a gold mine because of all the equipment that's needed. So they get involved and basically put up some of the money to help these mines operate and go out and get the gold. And in exchange, they get what's called a stream. They get a guaranteed stream of the output of that mine for a certain period of time. And as Brett was explaining to us on the other side of the break, that's actually protected on the title of the mine itself. So, because one of the things you might be thinking of as we're talking about, the different risks that you have in trying to expose your portfolio a little bit to precious metals, one of the things you might worry about, well, what happens if the mine goes bankrupt or somebody else buys it and takes it from me? But what Brett was explaining to us is that's actually not possible with this particular type of finance because Metalla goes on the title of the mine itself. Did I understand that correctly, Brett?
Yeah, that's correct. So in the most of the jurisdictions in the world, the royalty is registered on title and it runs with the land. So if another company comes in and does a hostile takeover, or if a company goes bankrupt and some other company comes in and buys the assets and puts the mine back in production, the royalty's safe. It's safe there and into perpetuity. That means forever. Anything that comes out of that ground, we get our percentage. It's amazing. So, some of these royalties that we've picked up have been in existence for 20, 30, 40 years. It's a lottery ticket that does not expire.
Yeah.
And we've got a lot of them. And I think it's going to do really well for the shareholders going forward.
And I could say, because I am actually one of your shareholders, and it's funny, you guys approached me when you started this and you got into this a couple of years ago, like you were saying, EB, and you said, hey, this is what we're looking at doing. And, the three of us have all been playing in the precious metals markets for years. And frankly, we've been somewhat burned because we had a big uptrend for a number of years. And a lot of us got involved at that time. We got excited about it. And then the uptrend kind of fell off, and it's been trading in a little bit of a down range from where it had, it seemed to had gone up to almost 2,000 at one point, but now it's kind of trading down below that. So, a lot of us were kind of becoming a little bit reticent to at least continue to stay so involved in the gold market. That was a big part of some of our holdings, at least some of my holdings for many years. And, so you guys approached me with this project, and I was kind of like, I don't know, and here it was, I think it was, at 20 cents when you contacted me or something?
Yep.
And, and then finally you tell me, okay, it's it's getting around 50 cents, Morgan. I mean, we think this thing's really doing well, and you might want to take a look at it. And I'm kind of like, I don't know if I can do it again. I'm just not sure. And then finally the thing, I don't know, what it hit about, 70 or 80 cents.
Was this before or after your Bitcoin?
Oh, this is after that whole Bitcoin thing. Yeah, what I like to refer to as the Bitcoin debacle. But where I didn't buy when I came on the air and said everybody should buy. But now in this case, maybe I learned my lesson and I finally put some money in it, and I put actually a significant piece of money into this company. And just since I put my money in, which was, I felt like I was coming to the game a little bit late, it's gone up by 50% since I went in on it.
Yep. And that doesn't include the dividends. We started paying a dividend, and that was part of what got you, because you were kind of telling me this story, and I said, we'll pay you every month. All you got to do is just open the mailbox.
Right. I mean, I love dividend stocks because you're getting something back. You know the company's working. obviously you don't get the full value of the share every month, but you get something back, and that's in addition to the rise in share price that you're getting. It seems to be that you guys are announcing a lot of deals and things in the company. So it seems like there's a lot of shareholder excitement about what the future holds. And in particular, I understand you guys are running around right now basically trying to close as many deals as you can. Mm-hmm. Can you explain to me why that's going on?
Yeah, because, see, a lot of what you were describing with your personal frustration is what a lot of people struggle with. They finally convince themselves it's a good idea to make an investment once they've read about it in USA Today, and everyone agrees with them in their cul-de-sac party that it's a good idea, and okay, finally it's a good idea. Well, that's usually the time you want to be selling. It's really hard for people to figure this out. So professional investors, and I mean, I've done this for a couple of decades now in different markets, as you've seen, you got to be excited about stuff when nobody wants it. And that's because nobody's looking at it. So when nobody's looking, I mean, remember I was buying a rental property in 2009. That was when we met 10 years ago. That was what you were helping me structure. And I was trying to tell you, you said, God, all these things are boarded up. This is pretty dangerous up there. I said, I know. There's nobody buying rental property. It's buying this stuff for 10 cents on the dollar. Well, now it's a very crowded market. So everyone is buying that. And you have all these New York guys that are competing with you, and there's 20 offers on every property. So you don't want to be in a market like that because it's too much work. So with the gold industry right now, I mean, we think we're setting up for a tremendous and generational rise in the price of gold. And later we can talk about why that would be the case. But I can tell you firsthand that the gold market is in desperate times. And so for Brett, that's a time when people are willing to deal, because they're tired and they're frustrated. Yeah. And the gold price has gone nowhere for 6 years or more. And so they're just saying, look, just give me something for this, and it's the best I can do. And anyway, so that's the time you want to be excited. Now, what's going to be hard for shareholders is about the time everyone starts talking about it and saying, God, this is great. What do you own a gold company? All this. That's when we'll be probably selling, or we're not doing very much and trying to tell people it's not exciting to us anymore. And so we always tend to run opposite of most people.
Well, and the concept you're kind of laying out there is the sort of follow the herd mentality is not usually going to be that successful in investing. You kind of need to be out in front of the herd. You need to be spotting that thing that right now everybody thinks is junk, but give it 6 months and they're going to have a different perspective on it, or they're going to change their minds. You don't want to be, when everybody's figured out that something is a great area to be in and is already jumping in, you don't want to be following the herd at that point and jumping into it, because your chances are, that the money's already been made in that industry.
Yep.
So if you're not out in front and you're not taking risks. Well, let's talk about the gold price, because that's been something that, is honestly just kind of shocked me over the years, how low the gold price is. When we see all of the other assets, and gold is a tangible asset, we see all the other assets in our society inflating wildly because of what I perceive to be the Fed's quantitative easing program, which is, easy money, as we call it on this show, the Fed's easy money program. It's causing everything to rise in price. Why not gold?
Well, let's put things into context. This can be a big topic for people. How much gold is there in the whole world? Well, let's say maybe 125,000 tons, maybe 130. It's it grows a tiny bit every year. Not that much, though. Okay, let's say that's maybe $7.5 trillion or something like that. Microsoft's market cap is almost $1 trillion, right? Saudi Arabia's state-owned oil company is potentially going to come public in the next year or two. Valuation could be $2 trillion.
Yeah.
Okay, so I mean, you start putting this into context, and you say $7 trillion is not much.
Right.
I mean, the United States does GDP $20 trillion plus per year. I mean, it's probably $70 trillion in debt on country debt in the world if you add everything up. So I mean, it's the gold price has a lot of room to move. I mean, that's I think important for people to understand. Now gold is a finite quantity. I mean, you can't just create as much as you want. Like you can't just make twice as many bottles of Coca-Cola in a day. You can do that, but you can't just turn on a machine and say, I'll take twice as much gold. Right. And in fact, the number of gold discoveries in the world has been plummeting. I mean, so you haven't had any large discoveries, and Brett would be an expert on this, maybe 15 years since has been the biggest discovery. So, I mean, you have a supply shortage on the horizon. Yeah.
Well, and that's one of the things is when you've got the industry the way it is right now. I mean, you were explaining to me basically gold mining companies are collapsing into each other. They're having these mergers, but they're mergers of necessity because neither entity can actually stand on its own in business and continue to make it. So they kind of fall together and say, well, maybe if we lean on each other, we can make it a little bit further. But companies in that situation are certainly not going to be investing in and funding the search for new deposits.
Well, okay, think about this. When the sector is booming, so take the tech boom that everyone got kind of slaughtered in 1999, 2000, AOL, Time Warner, you have these mergers, these mega mergers, and the CEOs are fighting over who gets to name the stadium. So that's the sign of a market that's about to pop. The other side of it is what's happening in the gold business, where you have these defeated CEOs that just say, "Is there just any role I can have of any kind in the new entity?" Okay, so that's what's happening right now, and it's important to realize that we see that as an exciting thing.
Yeah.
Okay? Because people are quitting.
Mm-hmm. So the market doesn't look so great right now.
That's right.
Now might be the time you want to get involved in it. That's your thought process.
Exactly.
Wow. Well, let's talk some more about the Fed when we come back, because there's been so much money printing in the last decade or so, and that's had a huge effect on our economy, including, screwing up the business cycle. We want to kind of try to help the folks at home understand what that's done to us. So stick around, folks. We'll be right back on the Morgan Streetman Show on Money Talk 1010. And welcome back to the Morgan Streetman Show on Money Talk 1010. Today we've got some very special guests with us from Metalla Royalty and Streaming Company, which is ticker symbol MTAFF. And we've been talking a lot about Metalla today in terms of it being a potential investment. Now, of course, none of us here are investment advisors, and we're not trying to give people investment advice. We're really just sharing our own personal stories. I'm actually a shareholder of Metalla myself, and these are a couple of friends of mine over a long period of time, and some really, really great guys that I really trust. And so I wanted to bring them on because not only do they have knowledge about the company that they're involved in, Metalla, but they also have all this additional knowledge, and they look at the world in ways that at least I think are pretty darn reasonable and logical. And, of course, as you know, if you listen to the show all the time, we don't think most of the people that you can hear out there are looking at the world in a reasonable way and trying to bring you the truth as they know it. But that's what these guys have always done when I've talked to them with me. And that's what they're here doing with us today. And one of the things we wanted to get to, one of the pieces of truth we wanted to talk about, is what the Federal Reserve has actually done to our economy over the past decade, where they've had artificially suppressed interest rates.
Well, the first thing people need to understand is anything named by the government, you've got to take the opposite. So if you take the food safety law, this makes food dangerous. Okay, so everything the government does is a naming game. Federal Reserve, it's about as federal as Federal Express. Okay, so the banks own the Fed and control the Fed, and the original purpose was to create some stability with money flows. After the earthquake and fire, early 20th century in San Francisco, there was a lot of money that was just surging in and out of the country to rebuild. So it makes sense that you have some sort of body kind of governing how money flows around. But the problem is that the Fed is completely beholden to the banks, and the banks aren't necessarily have any consideration for the people. So the Fed has been very involved in the U.S. economy for the last 15, 18 years. I mean, prior to that, it wasn't that involved. I mean, it was kind of a banking regulator type function, but now it's involved a lot. And you hear Trump talking about the Fed, and you hear the Fed making all these statements, and the Fed will be involved in the U.S. economy to the degree it is now until it explodes, and ultimately that will happen because you have a debt-based economy now. You don't have a savings-based economy. You have a debt-based economy. It has to have more debt, cheaper debt, constant debt.
Right. The way new money is created in our economy is through the issuance of new debt. That's the only way that money comes into existence in our country.
That's right.
Is with accompanying debt.
That's right. So you had the Federal Reserve's balance sheet was maybe $800 billion prior to the crisis, and now it's been as high as $4.5 trillion. I mean, maybe it's like $4 trillion now, and we think that number is going to get much larger. So you've seen evidence of that recently. I mean, the banks had announced they had tough earnings because the mortgage refinancings went down because the rates started going up. And sure enough, now you hear, well, maybe we'll stop raising interest rates. Maybe we'll even lower them.
Yeah.
So that's what's coming. What the Fed does, I really want people to understand this. If you invited me to your house and I went to the restroom and started a fire in the restroom, and then I came back to dinner and sat down, and then I said, oh my God, the bathroom is on fire. I'll put it out, right? Oh, you're such a great guest. You've saved the family. Right. No, I basically created a problem and then acted like I saved the family. So what the Fed has done right now in the last month, it's very important to see what they've done. They've said we'll be patient. We'll see what's going to happen. Maybe we'll even if the market has a shock. So let's say the stock market goes down 10% and everybody's on fire and the Fed says, we'll rescue, okay? We'll come in and rescue, but we're going to have to do this and these things, which would be controversial right now. Because people right now would say, well, you're just printing money.
Right.
But once there's a crisis, okay, do whatever you need to do.
To fix the crisis.
That's right. Just do whatever you got to do. And everyone kind of overlooks the small price that they'll say you have to pay. Okay, so that's what's coming. And it has to be that way because otherwise the system is over.
And we also kind of saw that kind of distortion in the market itself. And that's what the Fed's been doing the last 10 years. I mean, it was very stark when President Obama came into office. Essentially, the Fed dropped the interest rates to what is the equivalent of basically zero. And that's the Fed funds rate. And that's the rate from which all the other rates are determined.
That's right.
Because that's kind of like the first rate.
Right.
The first lender is the Fed, loaning the money to its member banks through its window, which, isn't available to just anybody. You have to be one of the member banks to borrow from the Fed at that interest rate.
Right.
And so what we're talking about, though, is that the Fed dropped the interest rates from it was about 1% to zero and then maintained them at zero for essentially the entirety of President Obama's presidency. Now, not only was it unprecedented for them to drop the rates that much in one move, normally they go up or down by what they call 25 basis points, which is 0.25%, not a full percent, but 0.25%. That's normally how much they move it. So for them to drop it 4 times the normal move at once was a pretty severe action. And it was designed to stop the natural functioning of the market, which is that they had released too much credit into the market. Prior to that we had the huge housing bubble. And then when the economy fell apart, basically we were due for the second Great Depression.
But they did something else that most people overlook, is that they stabilized the mortgage market for the benefit of the banks. So they bought mortgage securities.
Right.
And then they also bought United States treasuries because the government needed to issue, say, $1 trillion extra in treasuries than it had the capacity to. And what they did is, this was a little scheme, is they told their member banks, you buy the treasury bond in the auction, and then we'll buy it from you at a slightly higher price, which will give you a little profit, stabilize the banks. Because remember, people thought Bank of America, $3. I mean, people thought banks would fail. So this was all part of a plan. Now, it wasn't a nefarious plan. It's just a plan to put the good times back, turn the music back on,
Never let the party end.
Exactly. Yeah. Now it's a long time. The party's been going on for a long time.
Right. Yeah. We've had an additional 10 years of not having to pay the piper, not having to pay for what we've been enjoying.
Now, why does that matter? Okay, so why that matters is because it's a law of the human psychology that as time goes on and money is easy, people start doing foolish things with money. Okay, so you've probably seen this in your personal life. When times are tough, I mean, boy, you're really kind of careful about things. But then you really start to slowly get lazy. And then by the end, you start doing things that you would never do if things were tight. This happens in business. Businesses, they're careful after a downturn. But at the end of the downturn, they say, let's get into that other business that we have no business being in.
Yeah.
And this is what the government does, and let's build a bridge to nowhere, and let's build a bunch of parks and things. We'll sell some bonds, and we'll take care of it later. And then if the revenue dries up, if tax receipts dry up, then that's when that's what causes all crisis. Personal life, business, government, it's all the same. So we've prolonged that so far now that when it ultimately hits, it's going to be much worse than it normally would have been.
And when it does ultimately hit, we're probably looking at a pretty severe correction, which while we had a sort of an economic slowdown after 2009, we didn't have the kind of severe correction that we were expecting, like a la the Great Depression. Now, the thing about these corrections is they don't last forever, typically, but only if you take your medicine in one sip. What we're trying to do is put off taking our medicine or sort of spread it out over a long period of time, and we're not ever paying for all this that we're enjoying. We've been borrowing money now for decades, and at some point somebody's got to pay all this back, so to speak.
Well, that's not going to happen.
Right.
So we'll continue and push it out even further. But to compound that, look at the retiring generation right now. Where's all their money? It's either in their home, their biggest asset that they own, or it's in a 401k, which means that it's in the S&P 500.
Yeah.
And so if you have a market correction, people immediately are going to fear for their future. They're going to say, look, thought I was ready to retire. What are you telling me? I'm going to work 20 more years? I'm not going to do that. I'm falling apart.
Your pension's gone.
Exactly. And then you have this great downsizing where people need to sell homes. Because the 65 to 70 generation, they have a different taste in homes than people coming along nowadays. This is kind of, I don't know how we're going to reconcile this, but you're selling this house and the market's not there for the house to be sold, and then you're trying to take some money from your 401k, and the stocks are down 15% or something, and you don't want to do that. Okay, so you can see how all this is set up perfectly, and then as the dominoes begin to fall, that's when you'll have the Fed come in and say, okay, we have a plan. We have a cute name for it. We've come up with a very interesting name. It makes you feel good to say it. Write articles about it, and Paul Krugman will tell you that it's really smart to do this. So you can see how all the people come out, and they come and line up to support this, and this is how it'll go. Now, here's why this matters. Okay, this is not about someone's conspiring against you. Why this matters is you have to see this and say, what am I going to do in order to be able to survive and potentially even thrive as this obvious sequence of events plays out. And if you can do that, you're going to enjoy it.
Yeah. And one of the things that people do when they're thinking about how am I going to survive, how am I going to thrive, they think, let me hedge my bets a little bit. Let me put some money into something that's kind of outside of the traditional markets, and that is something like precious metals, which have been used as money for the entire history of human history.
Yeah.
But yet kind of exist outside of the market forces that are affecting things like our mortgages and our house prices and things like that. Gold is on kind of a different track.
Well, gold is money. Okay, so what's in your wallet is not money. That's government currency. Okay, so money is something you can exchange at any time for government currency of any flavor. And so that's why gold's important. Now, that matters when all these things begin to happen, that government currency is serious risk.
Right.
You might be paying $100,000 for lunch 50 years from now.
Right,
Okay,
right.
So
like Venezuela.
Exactly. So, with gold, that doesn't matter because you can then turn it back into government currency and buy something.
Brett, why don't you tell us real briefly about some of the most exciting projects that you're involved in right now with Metalla?
Well, Morgan, we recently just acquired a portfolio of 18 royalties from a multi-billion-dollar gold company. And, it was a big transaction for us. It really increased our critical mass. And that's important for investors because, what we want to provide is a diversified way to get all the leverage and predictable cash flows from these gold miners. And that translates directly back to the investors. And it does that through capital appreciation. It does that through dividends. And it just does that through the growth of our company and our business. And as we've gone and built this thing from zero up to, about 150 or so million in market cap in a couple of years. So it's a business that is not relatively known very well for kind of the generalists out there. It's a place where a lot of smart money has kind of hid in this sector for a while, and that's why we wanted to build this. We wanted to build this for, the people to get exposure, to be able to have products that would protect them through tough times.
Yeah. Well, let's pick up with some more of that discussion on the other side of the break because that's some very interesting stuff, Brett. And then we're going to get into our Out There segment. So, folks, stick around. Welcome back to the Morgan Streetman Show. We've got a couple of my very good friends here, Brett Heath and E.B. Tucker of Metalla Royalty and Streaming Limited, which is a gold and precious metals finance company that is doing a lot of exciting things. And on the other side of the break, the CEO, Brett Heath, was just telling us about some of the projects that Metalla is involved in, some of the exciting things that it's doing. And folks, if you want to start following this company, it's MTAFF. That's the ticker symbol. And you'll see, I mean, they have a press release about every week. They're doing a new deal. They're acquiring a new royalty. So there's a ton of exciting things going on with the company. And Brett, I wanted to give you just kind of an opportunity to kind of recap that and bring it home for us, what Metalla's got planned for the future.
Thanks, Morgan. We have a very unique business strategy here. You know, we collect checks from mining companies that mine gold and silver. Right now, in the last 2.5 years that we've been in business, we've acquired 43 of these assets. So that's 43 times more likely that investors get, you know, more upside surprises with discoveries. You know, that's more leverage. Mm-hmm. Every dollar that the gold and silver price go up adds more cash flow to the company, and returns will, you know, drive dividends. It's just a fascinating way to get exposure to gold and silver. And, you know, we've been able to grow this and, you know, make it quite a success over the first couple of years. And we look forward to continuing this over the next couple of years is really we're just getting started.
Yeah, well, as one of your shareholders, I want to thank you guys because you're doing great things for the shareholders. And, you know, I'm expecting big things for the future because I know you guys so well and I've been involved with you for so long. And I see that you're really in your element in this business, and I'm expecting the stock to just keep growing and growing from where I sit as an investor and as a shareholder. So I appreciate you guys' hard work, and you know, and I know now's kind of the key time when the gold price and the silver price are suppressed, and they are suppressed from where they should be because, like we were telling you earlier, everything else in your life is inflated. A gallon of milk is now $5 when it used to be $1. But gold is kind of traded in a range, and it hasn't experienced that same inflation. So what we think is that may be coming one day soon.
Once that comes in, you're not going to believe what you see because
Yeah.
it's an under-owned asset. And when people flood into it, it's very hard to get it.
Right.
And so and that's exactly the setup that you see when it goes just completely nuts. You get ready for that.
And you know when it starts to go gangbusters and everybody's going to be trying to get into it, you know what people are going to do? And this leads us right into our Out There segment today. People are going to jump on eBay and start buying gold coins from some seller on eBay because they think they're getting a deal on it.
Don't do that, people.
Yeah.
Please don't do that.
Yeah, because you know what we want to tell you about in our Out There segment today, and you wouldn't think this would even be possible. You wouldn't necessarily think that it would be profitable, but when you think about the fact that an ounce of gold runs, you know, it's about, what, $1,350 right now, round numbers, thereabouts, $1,300. You know, that's an ounce of gold. Maybe it's been as high as about $1,850, $1,900 back in 2011. But, you know, a single gold coin, that's what you pay for it. And you'd think, who has the time and energy to counterfeit a single gold coin? Well, somebody out there does. And they're not just counterfeiting the coins, but they're also counterfeiting the 1-ounce bars. And they're counterfeiting up the line, too. They're counterfeiting the 10-ounce bars. But your basic retail purchaser is going to be buying the 1-ounce bars because that's what people can generally afford. And just so you get some idea of what we're talking about, these are like the credit card-sized little plastic packages that you can buy that have the 1-ounce bar in them. We're not talking about those bars that you see the picture of Vladimir Putin holding up on TV. Those are about
400 ounce.
400 ounces.
Yeah.
And so those would run you about $750,000 to buy one of those. So almost nobody has those at their house.
Yeah.
If you got gold at your house, you probably got the little 1-ouncers. Well, here's the thing. A lot of those, apparently, I say a lot, we don't know exactly how many, but a fair number are faked. They're counterfeit.
Well, I've seen these personally and spent a lot of time working on this. I mean, you see it a lot in the 10-ounce as well because the 10-ounce is big enough where you can put tungsten in the middle. Okay?
Yeah.
It's a similar weight and similar kind of density, and so you can put tungsten in the middle, and then it's covered in gold. Essentially, you bought a tungsten bar that's gold-plated.
Yeah.
So that's a big problem because tungsten is a lot cheaper than gold per ounce. So how do you avoid this? Well, I like the 1-ounce government-minted gold coins. If you look at the U.S. Eagle, that's a nice coin. It's not common for someone to fake that coin if it weighs a proper ounce. You can have it tested, scratch tested if you want, but typically you're not going to see counterfeiting in that. What you're going to see is counterfeiting in something that has a little more size to it, and if it's selling at a discount, if the bar should cost $10,000 and a nice guy on eBay is willing to sell it to you for $6,400, probably there's something wrong with it. So you use your wits there. But one thing people could consider is if you buy these U.S. Eagle, Canadian Maple Leaf, Austria makes a nice Philharmonic coin, and a Krugerrand, South African Krugerrand is a nice coin, which is actually an alloy, so it's got some copper and other things mixed in, so it's more durable. If you stick with these common coins, you're going to avoid a lot of problems, and you really want to make sure you're buying things that you can feel comfortable with.
Well, and so if you are going to buy physical, you got to go to a reputable dealer. You can't do that kind of transaction on eBay, which, like you say, is where a lot of people try to save a couple of bucks here and there.
Yeah, you don't want to save money in life on things like your dentist or your heart surgeon or your gold dealer. Okay, so these are the things that you want to pay full ticket on this stuff.
That's right.
Yeah,
that's right. So if somebody was out there wanting to buy, I mean, they make these systems that could actually test the metal. I mean, because I've even heard some inklings and I've seen some reports. Now, this is going back a few years when the gold price was higher, which, like we said, I think encourages counterfeiters to get involved in a market. But I had even seen that there was apparently somebody faking some of those Krugerrands. Pretty convincingly, apparently.
It's possible.
Yeah.
You can definitely do it. I think the incentive is not there to the same degree with your Krugerrand, because you have to then press the coin and do all these things. So the incentive is there with certain products over others. It's a stronger incentive. So you want to just go with something that has a low probability. It's potentially could be fake, but it's a low probability of being fake. Yeah.
Well, it's probably a state actor doing the faking. I mean, that's the level of sophistication you would need.
Yeah, I mean, it makes sense.
It's like a China or a North Korea.
Yeah, what's the best way to raise a couple $1 million? I mean, you got plenty of labor, no cost in that.
Right. And the way the gold moves from place to place, I mean, they kind of account for it in bulk sometimes.
What's interesting about gold, from a molecular perspective, you can melt the stuff down, stretch it into the size of a human hair, wrap it around the world, pull it back together in a ball, and you don't lose one molecule. So it's really fascinating.
It never tarnishes. Is it the only noble metal that
bottom of the ocean, Spanish shipwrecks, 400 years ago.
Still
pull
shining.
It up, there it is. It doesn't erode. If you put an iron pipe down there, there's barely anything left. With gold, it's all there.
You talked about how much gold has been mined, and we're coming here to the end of the show. How many tons did you say had been mined? 1.7?
Oh, no, there's something on the order of 130,000 above ground in the world. I mean, it's like an Olympic swimming pool full.
An Olympic swimming pool, right. That's what I wanted you to do. Give us a word picture. An Olympic swimming pool, you fill that up with gold, and that's all the gold that's ever been mined in the history of the world?
That's it.
Wow.
Because all of it still, unless it was in a shipwreck or something happened, it's all here.
That's amazing.
Yeah.
Well, folks, go out there and check out Metalla, MTAFF. Check it out on the web. Very exciting things happening. Folks, wanted to thank our guests here, E.B. Tucker and Brett Heath, for joining us. This has been the Morgan Streetman Show, and that's the way I see it.
Thank you for listening to the Morgan Streetman Show. We hope you enjoyed what you heard, and if you did, please click like and subscribe to help us out. And remember that we recommend that you exercise your brain at least once a week.